Hi, my name is Justin Brown. I'm the Director of Investments here at Greenspring Advisors and lead Greenspring's Investment Committee. Today I'll be sharing highlights from the third quarter of 2025. Starting with market performance. After a second quarter that had a bit of a whipsaw effect, where U.S. stocks fell double digits in early April before sharply rebounding and finishing the quarter up double digits, markets continued their upward momentum and had a really strong third quarter. Emerging market stocks led the way, up over 10.5%, followed by U.S. stocks, which gained more than 8%. International developed and global real estate stocks also delivered positive returns. In the bond market, both U.S. and global bond markets posted gains for the quarter. The big story, however, was the Federal Reserve resuming rate cuts in September, reducing the federal funds rate by 25 basis points in an attempt to help navigate a cooling labor market and inflation that remains modestly above target. Looking at longer-term periods, long-term performance remains strong, with positive returns across most major asset classes over the 1, 5, 10, 15, and 20-year periods. The hot topic in the news right now is the current government shutdown. While I certainly hope this is resolved by the time you watch this video, I thought it would be good either way to provide some perspective on the situation. To summarize the situation, we're in a government shutdown because Congress failed to pass a federal budget or a temporary funding bill, which is called a continuing resolution, before their deadline. Without approved funding, many government operations and services are forced to pause until an agreement is reached. Now, while this certainly has many implications, I wanted to put some of this in perspective from an investment standpoint. This chart helps visualize the shutdowns we've experienced going back to 1981. This is the 11th government shutdown since 1981, occurring roughly once every 4 years on average, with the last one in late 2018. The average duration of these shutdowns has been about 8 to 9 days, though as of this recording on October 15th, the current shutdown has already lasted longer than the average. From a market return standpoint, the right side of this table shows that stocks have been positive about 70% of the time during these past shutdowns, with an average return around 1.5% over these short periods. While not necessarily indicative of the future, this at least suggests that shutdowns have not historically had a notably negative impact on markets. The most recent shutdown in 2018, for example, was the longest on record, lasting 34 days, yet it saw the strongest market returns of any shutdown shown on this chart. Now, as we take a step back to look at a longer time frame and the impact that each shutdown has had on financial markets, we see a continued trend of markets historically shrugging off these events. Looking at this table, you see in most cases strong 1 and 3 year returns following the initial shutdown that took place. In the 1 year period after each shutdown began, U.S. markets have on average delivered around 22% in returns. Looking at the 3 year periods, we continue to see strong performance, averaging 19.5% per year in the 3 years that followed the initial shutdowns. This underscores how markets tend to move past these events quickly, often rebounding once uncertainty clears. The recurring threat of a federal government shutdown often generates many headlines. But as with most headlines, financial markets have historically demonstrated strong resilience during these periods. Data shows that investors who remain committed through the uncertainty were rewarded with positive returns in the following months. Hopefully by the time you see this, the shutdown has ended, but it's impossible to know how long the current one will last or what its ultimate impact to markets will be, though history reminds us that patience and discipline typically pay off. That said, we recognize that events like this can feel unsettling, and they can affect many people directly. If you'd like to discuss your portfolio or financial plan, we'd welcome the opportunity to help. On behalf of the Investment Committee at Greenspring Advisors, thank you for your time today. As always, please don't hesitate to reach out with any questions.